A single truck sitting in a gravel yard before sunrise can generate more revenue in one day than most small retail stores make in a week. No storefront, no employees standing around waiting for customers, just a driver, a truck, and dirt that needs to move from one place to another. And somewhere in America right now, someone who never finished college is quietly running a fleet of these trucks, clearing more money in a year than most people with a graduate degree ever will. This is the economics of owning a dump truck business. And by the end of this video, you're going to understand exactly why this unglamorous, dust-covered industry is one of the most consistently profitable small businesses in the country. Let's start with what this business actually is, because the phrase dump truck business hides a surprisingly complex operation underneath it. At its core, a dump truck company moves bulk materials, dirt, gravel, sand, asphalt, demolition debris from one location to another, usually for construction companies, contractors, municipalities, or landscaping businesses. It sounds simple because it is simple. You're not manufacturing anything. You're not managing complicated inventory. You're solving one specific problem, getting heavy material from point A to point B, reliably, on schedule. And in an economy that never stops building, that one specific problem turns out to be worth an enormous amount of money. So let's talk about what it actually costs to get into this business, because the numbers here surprise almost everyone who hasn't looked into it closely. A single, well-maintained used dump truck typically costs somewhere between $40,000 and $100,000, depending on the size, age, and condition. A brand new truck, fully equipped, can run anywhere from $150,000 to $250,000. That's a serious number, and it's exactly why most people assume this business is out of reach unless you're already wealthy. But here's what most people don't realize. Almost nobody in this industry pays cash for their trucks. Equipment financing is standard practice, meaning an operator can often get into their first truck with a down payment somewhere between 10 and 20% of the total cost, financing the rest over 3 to 7 years. That changes the entire calculation. Suddenly, a $50,000 truck isn't a $50,000 barrier to entry. It's a $5,000 down payment and a monthly payment the truck itself is expected to cover through its own earnings. And this is where the real math of this business starts to reveal itself, because a single dump truck running consistently can generate an enormous amount of revenue relative to its cost. Depending on the region and the type of hauling contract, a dump truck can bring in anywhere from $600 to $1,500 per day, sometimes more on specialized jobs. Multiply that by 5 days a week, and you're looking at somewhere between $12,000 and $30,000 in revenue from one piece of equipment, driven by one person. Compare that to almost any other business you could start with a similar initial investment, and it becomes obvious why so many people are quietly getting into this industry. But revenue isn't profit, and this is exactly where a lot of newcomers get the economics wrong, sometimes catastrophically wrong. Owning a dump truck comes with a category of expenses that most people drastically underestimate before they get started. Fuel alone can eat up somewhere between 15 and 25% of gross revenue, depending on diesel prices and how many miles the truck is running each day. Then there's maintenance, and this is the expense that quietly destroys unprepared operators. Dump trucks are heavy, mechanically complex vehicles doing punishing work, hauling maximum loads over rough terrain and construction sites. Tires alone can cost several $1,000s to replace across a full set, and they wear out faster under this kind of use than almost any other commercial vehicle. Major mechanical repairs, transmission issues, hydraulic system failures, engine problems can easily run into the tens of thousands of dollars when they happen, and on an older used truck, they will happen. Insurance is another cost that catches new operators off guard.
Commercial trucking insurance, particularly for vehicles hauling heavy loads, is significantly more expensive than standard vehicle insurance, often running several $1,000s a year for a single truck and climbing substantially higher once you're operating multiple trucks or hauling certain types of materials that carry higher liability risk. Add in licensing, permits, and, depending on the state, specific commercial driver's license requirements, and the ongoing cost of simply being legally allowed to operate starts to add up before a single load of gravel has been hauled. So once you account for fuel, maintenance, insurance, financing payments, and the driver's own time, what's actually left over? For an owner-operator, someone who owns one truck and drives it themselves, realistic profit margins typically land somewhere between 15 and 30% of gross revenue once every expense is accounted for. On the lower end of that revenue range, that might mean clearing somewhere around $30,000 to $50,000 a year in profit. On the higher end, with steady, well-paying contracts and efficient operations, that number can climb toward $80,000 or even $100,000 annually for a single person driving a single truck. That's a serious income for someone who didn't need a college degree, didn't need to raise investor capital, and started with a relatively modest down payment. But the real wealth in this industry, the kind that builds generational money rather than just a solid income, comes from scaling. And this is where dump trucking starts to look less like a job and more like an actual company. The moment an owner adds a second truck and hires a driver to run it, something interesting happens to the economics. That second truck generates its own revenue stream, and while the driver's wages eat into the margin, the owner is now making money from labor they're not personally performing. It's the same principle that builds wealth in almost every scalable trade business. The owner's income stops being capped by the number of hours they can personally work in a day.
A well-run operation with 5 to 10 trucks, each staffed with a reliable driver, can generate well over $1 million a year in gross revenue, with owner profit margins that, once economies of scale kick in on things like bulk fuel purchasing, group insurance rates, and shared maintenance facilities, can actually improve rather than shrink. Some of the most successful dump truck company owners in the country run fleets of 20, 30, even 50 trucks, and at that scale, they're not really running a trucking business anymore in the traditional sense. They're running a logistics company, one that happens to specialize in moving dirt and gravel instead of packages or freight. Now, where does the actual work come from? This is a critical piece of the puzzle, because a truck sitting idle in a yard is a truck actively losing money between the loan payment, the insurance, and the depreciation, whether it's hauling material or not. The most reliable, steady work in this industry comes from long-term contracts with construction companies, particularly on large-scale projects like highway construction, commercial developments, and residential subdivisions, where a steady stream of dirt, gravel, and debris needs to move for months or even years at a time. Municipal contracts, hauling for city and county infrastructure projects, tend to be especially valuable because they're typically stable, predictable, and pay reliably, even if the margins are sometimes slightly tighter than private jobs. Then there's spot work, one-off hauling jobs that come up through relationships with contractors, landscaping companies, or demolition crews. Spot work often pays better per load than long-term contracts because it's typically needed on short notice and there's less competition bidding the price down. But it's also unpredictable, which is exactly why the most successful operators build a mix of both, a base of steady contract work that keeps trucks consistently moving and covers fixed costs, layered with higher margin spot jobs that boost overall profitability when they become available. There's a psychological reality to this business that outsiders rarely appreciate, and it explains why so many people who try this industry quietly wash out within the first year or two. This work is physically demanding and mentally exhausting in ways that aren't obvious from the outside. Drivers are up before dawn, navigating heavy machinery through active construction sites, dealing with unpredictable weather, difficult terrain, and demanding schedules, where being even slightly late can mean losing a valuable contract to a competitor. And unlike an office job, a mechanical breakdown doesn't just cost you time, it can cost you thousands of dollars in repairs, while simultaneously costing you thousands more in lost revenue from missed hauling days.
Successful operators tend to be the ones who treat maintenance not as an expense to minimize, but as an investment that protects their single most important income-generating asset. This brings us to one of the biggest risks in this entire industry, and it's one that catches inexperienced owners completely off guard: cash flow timing. Construction companies and even municipalities often operate on payment terms of 30, 60, sometimes 90 days after a job is completed. That means a dump truck owner might haul material for weeks, burning through fuel and paying drivers before ever seeing a dollar from that work. For an owner-operator with tight margins and a truck payment due monthly regardless of when clients actually pay, this timing gap can be the difference between a thriving business and a business that quietly collapses under its own cash flow, even while technically being profitable on paper. There's also the risk of market cyclicality that every serious operator in this industry has to reckon with eventually. Dump truck work is deeply tied to construction activity, and construction activity is deeply tied to the broader economy. When interest rates rise and construction slows down, dump truck demand can dry up remarkably quickly, leaving operators with expensive equipment, ongoing loan payments, and significantly less work to cover those costs. The operators who survive economic downturns are almost always the ones who avoided over-leveraging themselves during good years, keeping enough of a financial cushion to weather several months of reduced demand without their entire operation collapsing. So what actually separates the dump truck owner clearing $40,000 a year from the one running a fleet worth millions? It rarely comes down to luck, and it almost never comes down to who has the newest truck. It comes down to relationships, specifically the relationships built with general contractors, project managers, and municipal procurement offices who control access to the steady, high-volume work that keeps trucks consistently earning. It comes down to discipline around maintenance, treating every truck like the income-generating asset it actually is, rather than deferring repairs until something breaks catastrophically. And it comes down to financial discipline, understanding that just because a truck can generate impressive daily revenue doesn't mean every dollar of that revenue is profit, and building enough of a cash reserve to survive the inevitable slow months that every operator in this industry eventually faces. So, does owning a dump truck business actually make financial sense? For someone willing to put in the physical work, understand the real costs hiding beneath the impressive daily revenue numbers, and reinvest early profits into growing a small fleet rather than personal spending, the answer is a genuine yes, and it's one of the more accessible paths to real wealth for someone without a traditional business background. For someone hoping to build something larger, a real logistics operation with dozens of trucks and steady institutional contracts, the ceiling on this industry is remarkably high, built on an economy that will always need to move dirt, gravel, and materials from one place to another, regardless of what else is happening in the broader business world. Maybe that's the real lesson underneath all these numbers. This isn't a flashy, headline-grabbing industry. Nobody's building a slick app to disrupt hauling dirt, and nobody's pitching this business on a stage in front of venture capitalists. But underneath the dust and the diesel fumes sits one of the most dependable business models in the entire economy, one built on a simple, permanent truth. As long as anything gets built anywhere, something heavy is going to need to move, and someone with a truck and the discipline to run it properly is going to get paid to move it.